Hello and welcome to another update video about Bitcoin. So with Bitcoin, I took out the subwaves here. We don't need all the subwaves. What is important is the higher degree waves, and if we've made a relevant 5-degree wave pattern, wave pattern. So it gets a little bit overwhelming if you have too many subwaves on the chart. So we want to start with just recognizing some of the important patterns and structures we've got on this chart. Then we take a look at some of the indicators that are relevant at the moment, as some of you have asked for. Then we take a look at the wave structures, really. So generally from a pattern point of view, what we have, we've got here an inverse head and shoulders still on the chart. It's not a beautiful one, but it is still one. You know, you've got a left shoulder with basically a low, and you've got a lower low, and you've got a higher low. Yeah, and this can stretch out sometimes a little bit. You can see that in red, we've got the resistance area here, which is located between 16,965 and 17,240 basically. I could actually move that a bit higher, all the way up to 17,414. Maybe I'll do that right now, because this is where we had most recently here the last highs. So it is necessarily also to be considered a resistance area in which we currently are. And really only if we break above 17,410 or 415 or whatever, plus minus a few dollars depending on the exchange, then we have a proper breakout. In addition to that, we've got this upward sloping channel. I would call that an impulsive price channel, because we have here a wave 1 to the upside. It's a 5-wave structure. Impulse. We've got a WXY to the downside, correction. We've got a 5-wave structure to the upside, impulse, 3-wave structure down, and another small 5-wave structure up, 3 impulses to the upside, and 3 corrections. So I consider that an impulsive price channel, out of which we would eventually need to break to the upside to fulfill the pattern here ideally. The wave count, Elliott wave count, is still that this is a higher degree ABC correction, most likely in a wave 4. This wave 4 would eventually most likely make another low. Always bear in mind, you can be, for example, on the daily chart in a downtrend, and you can be, for example, on the 30-minute chart or the 1-hour chart in an uptrend. Always know which time frame you're trading. Yeah, you don't necessarily need to trade the higher degree time frame. You can just be long on the lower time frame. You can even be short on the higher time frame. Just be aware which time frame you want to trade, and be aware if on your time frame the chart is an uptrend or a downtrend. The most simple way to recognize this is by just looking for 3 consecutive highs. Yeah, so higher highs. So you have your high, then you make a higher high and another higher high, indicating we're in an uptrend. Here you've got your low, a higher low, and another higher low, indicating also we're in an uptrend. That makes an uptrend. Yeah, and that also helps you to recognize a downtrend basically if it shifts. Here clearly we have a short-term uptrend. Also, what we Elliott wavers believe of, obviously, is that the trend shift is occurring when we have 5 waves up and 3 waves down. This was therefore the first signal. Yeah, we had a wave 1 up, we had a wave 2 down. How did it follow? Well, it followed on. It made another higher high and a higher low, and another here. Not yet a higher high, but it should do in the 3rd wave here. But that's what we're waiting for. But generally, if you look at the tops here, we still made 3 higher highs, or 2 higher highs after the first one. So that recognizes us that we're in an uptrend, basically, also in this upward sloping channel. But we are still below resistance, so this is a critical area to get through. We need to do that. This is really, really important. So above 17,410, we would have a valid breakout above this wave 1 high. Yeah, and then we could have that would give us basically confirmation that we are in a wave 3 breakout here. So wave 1 up, wave 2 down, and the wave 3 would be following. The wave 3 is most likely the most bullish, wave in this uptrend. And I know that by, or at least I can assume that by taking a look at the expected target. The target for wave 3 is normally the 1.618 extension as a minimum, and that would take us to $18,985. So it shows you that if we get this breakout above 17,410 or 14 or whatever, plus minus $4, it would take us straight away most likely to 18,985 in that region, yeah, sort of into the 19K region. However, as you can see here on the chart, it would not happen in one straight line. You also have here in the white wave 3 a subwave pattern in 5 waves: wave 1, wave 2, wave 3, wave 4, and wave 5. So this is what is now interesting. If we take a look now on the, just sort of in the lower level detail, basically what I told you in the previous video has basically, at the moment at least, worked out. Told you that I'm not convinced that this is already the breakout. Ethereum made some nice moves. It all fell into pieces again. Bitcoin also made a little bit of a move, but nothing too bullish. Initially this morning I thought this might become an Elliott Wave triangle. It didn't. It peaked a little bit higher. Can't be an Elliott Wave triangle, but in the previous video I mentioned to you this could be very easily just an ABC structure with a wave A to the upside, a wave B down, and yeah, ideal target. What did I give you? 17,210 pretty much. Here the 1-to-1 ratio. That's where we peaked and came down. The way this looks, this does not look impulsive. We even broke here this kind of trend line, even though it's not really a relevant one, is it? So we take it out, only 2 touch points, so we can take that out. But it looks like that this is coming down a bit further. This move up just looked correctively, or corrective in 3 waves to the upside. So it looks quite impulsive how we're coming down. And if we take out the wave B low here, there's exactly where we are now, 17,115, pretty much. Then it would be an indication that we're heading further down, and then break below 17,071 would confirm my primary wave count. Because as you remember probably from the last video, we talked about that this could be an A wave, a B wave, and the C wave would be still missing and could take us down here into the support area. There were 2 reasons why I didn't really believe yet that this was a sustainable breakout. First of all, it's Saturday, so it's a bit not that volume that you normally need. But in addition to that, we only had 3 waves to the upside. The move up was quite weak as well. And in the retracement here, we had not reached the support area. And this support area is actually quite relevant for such a wave too. Because if you take a look at the fibs again, you can see this is actually the 50% retracement. What you would normally expect in a wave 2. I mean, the 38.2 fib level is quite a shallow retracement for the wave 2. So ideally I would like it to go a bit lower, which hopefully happens. And so we had a combination here of different things. So we didn't reach the yellow support area, and we were quite weak in going up and had not made 5 waves yet, and then broke below critical support anyway. So yeah, we didn't go high enough, and we hadn't reached the support area. So 2 things telling me that ideally we come down lower, and we seem to be doing that. So if we now break this 17,115 level, which is also the 38.2% fib level, we will most likely come to the next fib level and then would reach my support area, my target area, the trend reversal area, where I would be very happy if the price reverses from here. Okay, and that's my update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.